Okay, traders, just let me know if you can hear me okay. I don't know if I'm having problems with the internet. It seems to give me some disconnection or some errors on YouTube. Seems to be plugging away okay. See who's in. Might just put my hotspot on. I was not getting that either. G'day, Nathan. No, good mate. Could just be we had a bit of a dropout in the internet. Basically, it was going to zero, but we've got home learning at the moment, so everyone's on the internet at the moment, which shouldn't do anything. But you know what NBN's like. Not as reliable at the best of times, or here anyway. All right, so let's rip into it. Then we'll have a bit of a chat about the current state of play. Just want to go over a few bits and pieces. Can now. So, Sedge, did it just drop out before? It all seems to be chugging away nicely. I'm not getting my hotspot through my phone, so normally I've got my phone as a backup. But yeah, whatever reason, that's not mobile hotspot. Why isn't that coming up either? I don't know. We'll plug away and we'll just see what happens. I think we should be through the worst of it. Okay, so markets. Look, I won't say there's a bit of that talk. We're copying and beating a bit. I mean, we're down just about 100 points a minute ago on the ASX, but we tend to be very quick on the sell button, but very slow on the buy button. Can't hear. Can you hear me? Okay. G'day, Bobby. Can everyone hear me? Is it just one person? It seems to be going through okay. Yeah, I think it is. Someone was answering before, weren't they? It might just be on your side. Yeah, okay. Hearing, okay, fantastic. Yeah, so what I was saying is that we're just going to go through the markets. Well, actually, firstly, just go through the usual. Welcome to Trade Setup, as I say each time. The live stream, it's the 19th of July. So remember, what you'll see on the screen is just our Twitter handle on the top left-hand corner. Join us on Twitter. Facebook, the top right, which essentially showing the same things. But if you subscribe to us at the bottom right-hand corner, which is YouTube, what you do is you get a pre-warning of any stream that we do. So normally I'll set up the stream within YouTube, probably an hour or two before. So it gives you a bit of a heads up. There's a stream coming at 12:30, sort of thing. So it does. If you're having any issues, you can go straight there, especially with the alerts or anything. There's been a few little problems with the alerts lately, but we'll slowly get that sorted out. IT, it's out of my domain, so yeah, we'll get into that. So minimise that, and just remember it's general advice only is what we're giving there. So, all right. So what I was saying is that the US got knocked around a bit on Friday night, which realistically not big figures. You're talking under 1% for all the major indices, which, yeah, I mean, nearly 300 points in the Dow. It used to be a lot. Now, with the levels we're at on the Dow, I don't know, 34,000 thereabouts, it's not as big as what it looks like in percentage terms. So yeah, like I was saying, our index, we tend to be looking for any reason to exit, and that's the market knows that. I mean, if you're a big fund or anything like that in the ASX and you're looking to buy, you will not buy on the open because you know your mums and dads are going to have to sell, or they're going to want to sell. They're getting a bit nervous. They've had the weekend to think about it, get knocked on the head, and we've done this before. And then we bounce straight back a bit. We're not saying that we're going to bounce straight back, but we have in the past, and we're stuck in a range in the ASX which we've been in for the last, I don't know, few weeks now. Okay, so to me, nothing's different. This is nothing different to what we've seen before. And we said, the market has said the same thing. This is the big sell-off. Turn around and we rally again, straight back to the top end of the range. So what the market's doing is chopping people both sides of the market until, we're going to get triggered in some sort of direction, whether up or down. I think there's a few factors which we'll discuss of why this market's a tad heavy. especially on the ASX, whereas the Dow could turn around and be up 400 tonight. I mean, you don't know. So, there's a few things sort of weighing on it, a bit of sentiment driven, and when the sentiment's running out on the upside, you probably find, even if people think longer term we're going to be bullish over the next few weeks, if day to day it's running out of steam, you need to flush people out. We've spoken about this before. And any bears that have been around for a while, thinking this is the one, it's not the first time they've ever called this. They've called this a top, and they've been wrong time and time and time and time again. So what we could do is really just trade what we see, and steer clear of all the stuff on Twitter, on Facebook, or LinkedIn, whatever it is, saying it's the end of an innings. We're going into that big bear market, because realistically, fundamentally, nothing's changed. If anything, any sort of pullback on the market, any bit of nervousness, it just gives every reason why the Fed won't back off on their support. Okay, so we could try to factor in that time and time again, but it plays into their court a bit, if you ask me. I just want to make sure you can all see. I'll just get transition then across. It might be bigger, so you can see more of the screen. That's probably better. So I'm going to drag this across here. I was just watching the HSI, the Hang Seng, which is getting knocked about quite a bit. A couple of shorts on that, and I feel like I've left quite a bit on the table. Yeah, which I probably have. It's just bouncing back. Let's go to a 5-minute chart. Anyone like my little note? Trade what you see, not what you think. Anytime I trade what I think, I'm not the smartest tool in the shed, and I tend to be wrong. So, pick in a bottom, I'll go short, and there's just more weakness comes through. So I sort of leave in that there lately, just to, especially if we're going to see a bigger sell-off, because I don't know if anyone trades a Hang Seng, that you get these kind of opens and you expect a gap fill, just powers down. So that from the open, from 741 to 433, what's that? 300 points, 300 point after a gap down of say 300, 200 points or so. So, don't think that we're going to get this. The market will play around there, just looking to get those gap fill traders buying, flush them straight out. So, like I said, trade what you see, not what you think. So that's the Hang Seng powering into. You might have thought that was going to go with this support. It's powering into another kind of a support level here. It doesn't mean that it's proven just yet until it bounce off it. Until we hold a higher level off that zone, it's not potentially support, but it is a level where you've got to be concerned if you're short. So I've just nibbled at this a couple of times on the short side, and realistically, I left a lot on the table, which happens. I didn't want to play around with it too much. I'm not going to be sitting here doing a stream. I just can't concentrate while I'm being short. I'll be blabbering on about nothing while I'm trying to tell you about stuff. I'm watching the position at the same time. As we say, men can't concentrate on more than one thing at a time. So we've got that's that. We'll go over to the ASX. So what I want to do is just tick over the key markets. So what we said, fundamentals to me haven't changed. You got Fed support. They did have some inflation. Retail sales figures were better than expected, but so we've got that sort of figures that are coming out quite strong. But we've got the Fed going, hey, don't forget that we're not going to take it off. We're going to provide strong support. Inflationary numbers. It's transitory. They keep saying the same sort of thing. They've been pumping that out day in and day out. That message out day in day out. Okay, so we've got that's sort of one side of the coin. There's going to be many sides to a two-sided coin, really. You got COVID, which I think is not really triggering any major concern as such, but what it is doing is we might have just dropped out. No, we're okay. I think we're good. I'm still sending out the stream, which is good. I just saw YouTube flick around. So anyway, so we've got COVID concerns, which could be just weighing on the market a bit, but I don't think it's weighing on the market where people are getting fearful of a sell-off. Pullbacks are still getting supported. It's just that when you stretch an elastic band so far, there's always going to be a series of people at different levels that are getting nervous about a pullback and don't want to leave all these gains sitting on the table and see it wash away quickly or see it wiped away. So they will take some profits. There's going to be that profit taking. We've got earnings in the US, which is the first sort of banking earnings which have come out have been sold into. There've been a couple that have been not so great. Well, actually, they've all been pretty good. Beating expectations, I think they've got to smash expectations for actually to rally after the earnings report, whereas a few of them have beaten them by a bit, and the market's actually been sold down a bit. So it's kind of that buy the rumor, sell the fact mentality a bit in the US as they're coming through earnings, they're extended, da da da. But on the flip side, if you think that's going to trigger a big sell-off, taking profit, the economy's still opening up. They've still got backing from the Fed, support. They're still sort of we're not getting the Fed's not getting the jobs creation that they want to see. So those factors that really haven't changed. It's kind of where the market, if it's not going to go up, it has to flush. If you're running out of steam on the upside, the market will flush. Then reconfirm some support and start to build up again and start to run to new highs. So it's that rinse and repeat, rinse and repeat, rinse and repeat that we've spoken about in the past. So to me, that's kind of the factors that are happening. I was thinking this morning, sort of looking at your bonds, gold. Gold got knocked around a bit. Now, if that's a safe haven, where was it on Friday night? If we're worried about it, fearful of a sell-off, and gold's probably bounced back a bit at the moment. We're up $8 on Aussie gold. Only $1, so we're hanging around the 18.10 marks. It's kind of with gold, it's retesting the breakout, which we'll show in a minute. So what I want to look at is really just, firstly, we'll start off, go to a daily chart. This is the XJO. You can all see that okay. The bulk of what we're going to look at is this range area. That's on a daily chart. So that sort of top end of the range was put in around the 16th of June. So over a month now, we've held below those highs. We've probably got a lower, sort of minor lower high. So yeah, technically not looking so great for the bulls, but on the flip side, it's not looking so great for the bears either, because we are rejecting those lows. So we're rejecting highs, rejecting lows, but momentum really is still up. So if you're looking at that purely from a technical perspective, you could say there's a high in place, but the fact is, when you consolidate highs, so you've got this leg up here, when you start to consolidate highs, that's kind of a bullish move as well. Okay, so if you're looking at that and you're looking at momentum has come down, I'm looking at the MACD for momentum. When you sort of go back down to the zero line, so momentum's positive, back to the zero line, it seems to ramp up again. Back to the zero line or roundabouts, we're ramping up again. So the fact that we've actually pushed up and we're consolidating these highs is not, to me, overly bearish. I mean, I could be completely wrong. We could go tonight, we're down 600 on the Dow, which makes it a lot more significant, or even 1,000 points in the Dow, and the ASX is going to get crucified tomorrow. But for now, we're not doing anything that sort of we didn't do, say, this day here on the 9th of July. Same sort of thing. We reacted down off those highs. It's probably a bit clearer. We'll look at the 30-minute chart. Down off the highs in the open, got smashed, recovered a bit into the close. Next day, bang, straight back up again. So who's to say we're not going to chop around here and then tomorrow we ramp straight back up because the Dow is, made back those losses from Friday night. Okay, so for now, if you're looking to sell, I don't think the time is right just yet. There's a few, basically what we've got 4 in our portfolio of 10. The 4 are underwater, obviously, at the moment, and we've got actually Perseus, which is because of gold got sold off. That has been struggling the last few days when gold's gone up, and today it's actually sold off in the open and starting to pop a bit. So there is still buyers out there. We are still looking to potentially just play this range on the ASX. We're pushing in, finding support and rallying because that daily momentum is still up. Just looking at this daily again. I hate having to do that, but that daily momentum, you can look at the MACDs, longer term, the 200, EMA, the 50, the 20, and I've got the 10 on there, but don't worry about too much about that. The 50, 20, everything's up. It's just potentially just a bit of contraction. So we may continue to go sideways. We may continue to chop in that range. But if history is something to go by, we could be looking to bounce off this off the MACDs, pick up some momentum on the upside. We don't know yet. It's too early. If we start to see a serious breakout to the bottom side through support, then that's where we may be concerned about. And especially if we get this kind of action. Okay, to me, that spike down, when you get some sort of spike in either direction, there's a lack of buyers or sellers. In this case, a spike down means a lack of buyers standing away. They are nervous. And sellers, there's a weight of numbers in the sell side pressuring the market down. And then if we get this bit of a grind up, because that's selling down there, if you get this expansion down, it sort of stops, and then we get a grind up. That means there's still some sellers there. There's bargain hunters coming in, looking for it to flush and bounce straight back again. Everything's rosy. But the problem is this kind of action suggests that there's still some sellers lingering around. And anyone that buys it through here could be the second phase of a move down, getting squeezed out of the market. The market dumps on them basically, and the market can head south. So that's what I'd be more concerned about. If we keep chopping around here, I'm not as concerned. I'm sort of more concerned about not potentially not been on the boat when we rally up again. So even though the market was down nearly 100 points this morning at some stage, it doesn't. Yeah, it's frustrating because we're not going to the top side either. But at the same token, we are not breaking to the downside. We're not breaking through anywhere we haven't been before. Okay, so that's the ASX. We'll go and look at the S&P is still, on a daily perspective. If you're worried about a sell-off, that's not saying anything about a major sell-off. You need a bit of a belting as a heads up that something like this potentially you take out a key level. I don't know if anyone can see that. Uh, Something like this, the market's pressed higher, and then you get a couple of days just absolutely belted, and you get through an anchor to the uptrend. Like at this stage, we've got this level here providing some support. The market just went straight through, and then I'm not saying you're waiting too long to see that, because probably by then you're going to get, if you're not running stops, you're going to be out the window anyway. But and if you are running stops, there's a good chance that by the time you get to sort of this candle here, expansionary candle down, yeah, you're probably going to get tagged on your stops. But either way, that's kind of what you'd be more concerned about when you get this really powerful move down, which we really didn't see. We were looking at the S&P at the moment. The S&P, this sort of drive down on the S&P, and I'm only just taking this minor level, this pullback here, that sort of run that low, and then we just sort of pop through that low. The S&P is driven by, say, a handful of stocks in the tech sector, you big boys, that they got sold off. This market can go down, but realistically, the longer term trend, which is way down here, it could easily move down to 42.50, 55 from 43.27. So another decent couple of days of sell off and still hold that trend up. Okay, so yeah, there is momentum starting to ease up here on the S&P, on the broader market, on the daily. It could easily just sort of pressure down a bit and then bounce. We don't know, but the Dow is not looking too bad at all. That's what I'm seeing. The Dow's actually holding. Yeah, it's struggled up at these highs at 35, say 3,500 even, but it's still not. That's probably what I see there. It's not broken the uptrend at the moment. I mean, this thing could come down and bounce off this 34,100, say 500 points below, and rally back up again and go straight up and through. So there is, I think, the markets, and you'll see it especially in the US, as it gets extended, there is a bit of profit taking, but it doesn't necessarily mean the trend up is over. There's always profit taking in a major bull market. There's always is. There's a bit of profit taking, a bit of resetting, a bit of profit taking, a bit of resetting. Okay, so the Dow's not showing me anything there on a daily basis. If you're dropping down to, just look at the hourly, yeah, a bit of a flush lower, but we've seen this before, flush lower rally. Maybe this is a secondary flush, though. It might bounce, get a secondary flush, and then bounce straight back to new all-time highs. The S&P, bit of a flush lower, so that's that uptrend we're talking about. Yeah, it could be just trade down to these lows, but like I said, the daily basis, we're in a bit of a pullback just off those highs. Not too significant just yet. And I think there's more of a fear, not so much a fear base, but more of this COVID weighing on it, because we've got memories, don't forget. We remember what happened last time. Those COVID numbers ran up, and we've had some, what do you call it, vaccinations. But like a lot of, there is a couple of good charts floating around Twitter where the cases have gone up, but the deaths have significantly reduced. Okay, that's what we're worried about. We could probably live with it, and that's what we're maybe having to do. So I think it's got a bit of people spook saying, yeah, we've got a number of COVID cases is on the rise again in a lot of places, but the deaths is decreasing because of the vaccinations that are going around. So we might be just having to see a bit more data before people start to go, yeah, okay, yeah, it's actually the vaccination process is working. What they're talking about, this new variant, what do you call it, Delta variant, yeah, is bumping up the numbers, but it's not, it sounds bad, but it's not, the number of deaths is not on the increase, which means that we potentially increase opening back up and we're going to get back to a bit more normality. I think the UK or England have just come out of the lockdown, even though their numbers are going up. So, maybe they're taking a chance. They're punting that that's the case and they're not too concerned about it, or they know something we don't. So yeah, that is what I think is just lately pressuring it, but it comes at a time when you've got earnings in the US and everyone's watching the US anyway, and it comes at a time when the market's getting a bit extended and probably going to pause through this earnings season in the US anyway, or there's going to be a bit of profit taking. So I still think there's a buy the dip mentality floating around, which could provide some support to the markets. But at the moment, I'm not seeing a lot to just be too concerned about. Now, this is the Nasdaq. We were just saying, plowing higher. We've got a pullback here. We're back down to this rising support, but the longer term on the daily, it's still holding that trend. Let's get back from the daily trend up. So that's the channel, the trend. We're at the top end. When you're at the top end, you probably need a bit of a flush lower to rebuild. Who knows where it's going to, but for now, it's kind of like just hold on at the moment. That's what I'm feeling. I'm not seeing any reason why I should be bailing for the exits, thinking we've got a massive and going short the market. Definitely not going short the market. But I'm just going to let my stops work for now and see how we go. Now, if you go and look at potentially, we're talking about you're probably going to get the bond market moving first, the dollar, all that sort of stuff is going to, if there's going to be a safe haven bid, they're probably going to show up a bit of a heads up first. And we saw bonds, the market's selling off and bonds are creeping higher. So maybe there's a bit of a safe haven. I've got the daily there. I want to show you the 30-minute chart. I don't know what I've done there, but anyway, this is the US 10-year bond market. Okay. This was the action. Was it the 30, 10-year? Why does this look a lot different? So that was the action into the close. Is that right? No, it's today. So this candle here, green candle, that's the action from today. So it's actually popped higher again. So what you've got is the market selling off down here. Numbers come through at about 10:30 and the bonds start to rally. So that's yields coming down. So if we're concerned about inflation and we're worried about definitely the Fed being pushed into a corner, yields would be going up, not down, and bond prices would be going down. Okay, and that's what you got. You've got retail sales here, which retail sales come out better than expected. Bonds are pressured down. They trap some shorts and they turn around and squeeze back up again. Okay, so it's not really showing. Yeah, it is. The yield is what you're looking at, interest rates, but there's all this talk about real yields as well. Where's inflation, which is CPI and all that sort of stuff? Where's that at? It is sort of hovering at a top end. So I can't remember what it is in the US, but in Australia, you look 2 to 3% is roughly our inflationary target. Where if we stick to 2 to 3% within that sort of that band, there's no need to raise rates because that's what we're comfortable with. Okay, but when it gets to 5%, 6% or so, you start getting inflation pick up. That's where they've got to cool it with raising rates. The US have said they're happy to sit around 5 or 6% potentially, which is probably where I think they're 5.5, 5 to 5.5 at the moment on CPI, on your inflationary data. If they're hovering around there, they're happy to leave it because they're saying it's transitory. So they're expecting that number to come back down again, to within their band, which they're happy to let inflationary figures run for a bit. They don't want to cool it because they know that with all these debt levels, massive debt levels in the markets everywhere, housing, stocks, shares, everything, companies, massive debt levels. They start raising rates prematurely, they're going to cause probably more problems that they're going to solve. Okay, so that's with the 10 years, you're looking at the price going up in 10 years means yields are going down. So I don't know exactly with the US, but the Australian 10-year bonds are 100 minus the interest rate. So they're hovering around 100. They can't go above 100. Well, they shouldn't go above 100 because that means you've got negative interest rates. But the futures will be 100 minus the interest rate. So anytime you're thinking the market's very strong, we're looking at rate rises, bonds will be going down. They will be factoring that in. So at the moment, if you're thinking that, inflationary pressures, like people have been saying, the Fed's going to be backed in the corner, they're going to have to raise rates. The bond market was not saying that on Friday night. The bond market's saying we're not worried about that at the moment because we're rallying, meaning yields are going down. Okay, so longer term, this bond market's actually sort of chugging its way higher. We've been at the highs, we've pressed back down, and we're pushing back into these highs again. So what's that saying to you? It's the bond market's not really too concerned about rate rises just at this stage. So we're sort of taking that off the boil, which is saying that they're sort of agreeing with the Fed at the moment. Maybe we're happy where we are with these sort of levels, but there's no numbers that are not going to push the Fed too much further into the corner, if that makes sense. And they're probably right. The transitory effect on the interest rates is probably right. So that's what the bond market's saying to me. It could be a bit of a safe haven bid into that, but again, gold's not saying it's a safe haven bid because gold should have rallied. They should have been buying gold as an inflation, but that's not showing an inflationary hedge at the moment. If it's going down, it has been sort of creeping its way higher, but it's not getting out of hand. There's not a solid bullish action into gold at the moment. Yeah, we've gone up, and we just had a big flush higher, lower on Friday. The dollar can be a bit of a safe haven bid, but that's just punching into resistance. To me, it's not, again, this movement here, if we go longer term, that US dollar is more that it's probably been beaten down with the massive amount of stimulus coming through from the government. Now, and there's talk of more, or there is more, I think there's coming out. So, but maybe it's more of have they factored in um, more dollars, US dollars hit the market, so they should be probably lower, or have they factored in and it's starting to get squeezed out because that may not be as big as what we thought. There's probably a bit of a safe haven bit as well that sort of held the market because when the stock markets are selling off, a bit of a safe haven bid into potentially the 10-year notes and US dollar, which it didn't get out of hand. It was more choppy. If you can look at that action there from Friday night, that's actually today, isn't it? 8 o'clock. So this action here, that's chop. There is selling on spikes. So there is sellers coming in and there's, pressure down. The close was somewhere about here, I think, 6 o'clock. Is that right? 6:37, there we go. No, this candle here. Let's draw that up. So that was sort of the last candle, but it's just hovering. So we're seeing potentially a bit of a safe haven bid just in that, as we've seen equity markets selling off on Friday, but it's not out of hand. If there's really concern, that would have broken straight through that resistance zone. With bonds, I don't think there's a bit of a safe. There's more of a play on, I feel, interest rates, inflation, not getting out of hand, opposed to a safe haven bid. So we're sort of piecing all these together where, if you take all this into context and gold, look at gold. I mean, gold pressuring down. It's just retesting for me this 1810 mark. So if we can hold this 1810, this little pressure up in today, if we can hold this level and we can bounce back up today, we're not really. I think gold is just sort of chugging its way higher, and we'll probably find that it's more based on the US dollar than anything else. US dollar goes up, gold at the moment is pressuring lower. It's not linked to inflation, anything like that. So that's probably, I think for me, just look at bond yields in this is on the Euro bonds. So it's European bond yields there, sort of saying the same things. It's maybe more of the market saying, well, look, if these COVID cases keep chugging away, I think it's more of a squeeze on short plays that may be coming in, looking at higher yields, meaning bonds pressuring lower. If you're going short into the market on that perspective, and then you're seeing COVID cases trickle higher or edge higher, would you be concerned that bonds would go up? I would. So I'd probably be likely just to cut my position and reassess it. So I think there's more of that squeeze on shorts than anything else into the action, especially on your bonds. Aussie, well, not so much Aussie, but your dollar index. We look at the currencies. Euro to me it's sort of stuck off this low, which is suggesting that if it doesn't want to go into that low, that means to me the dollar, they're expecting the dollar not to go down, the US dollar not to go up. Okay, because they're basically inverse, pretty much perfectly inversely correlated at the moment. Euro will go down when the US dollar goes up and vice versa. So if this looks like it's potentially holding off a bit off this support zone, then that to me is suggesting that potentially the US dollar is going to back off and squeeze some of these long positions. And the Aussie, plowed through. That's not looking too crash hot at the moment. 12:30. What is that? I'm missing some data. I have to be missing data. Why is the Aussie showing me something missing there on the Aussie dollar? Don't know. 655. I think that feed's all over is skewed at the moment. We're getting a live feed now, but there's data missing. It doesn't open at 12:30. Going to get the market kicking off at 12:50 even. What does that? 12:50. So something happened with this data feed on this is TradingView. Anyway, if you've got anything you want to take a look at, whack it in the chat at the moment. and then we'll get onto some, whether it be shares or anything like that. I'm just looking at the Aussies sort of press through. I'm sort of expecting this as a flush and a bounce back on the Aussie into a key support area. I'm having trouble spitting that out. You can see that's what I'm looking at. The Aussie, you've got this zone through here. We touched on that, August last year, held a double bottom, pullback, continuation higher. This move here, start to flush. We're trying to go higher, we couldn't, so we need a flush down. So we need to just take out some of those longs of this leg up, especially. So this is a level that I'm just got my eye on at the moment, whether we can hold up around, 73.90 to 50. Sorry, 74. See if that Aussie can hold around there. It's extended on the downside. You can see extended has been pressuring down. If this starts to lift, then what you're saying is it's probably going to be risk on into share markets as well, into the US at least. It's a barometer for risk onto the Aussie at the moment. So yeah, if there's any stocks you wanted to look at, whack them in. So ASX 61. So we bounced back a bit on the ASX. We've got some stocks that are not looking too flash. No, I mean that's NVX. You can't see the side. Let me just transition there. So you should be able to see the right hand column now. Okay, so that's right. Euro Aussie. Will do, Bobby. That's a new one. I'll probably have to go and put a few support resistance lines on it. So I've got NVX, Novanix. I'll go through the positions we got. That to me, it's bullish. It's still bullish. We got in from 240, 246. So we've got a bit of breathing room. We missed today 295 high. I think we got a partial at $3. So I missed that by 5 cents. We backed off today. I mean, as you would expect, a market that is stretched, extended, has a good run up, and you get the overall market getting smashed on the open, you're going to get some profit taking. It's just whether or not this is enough of a flush lower for buyers to go, look, that's it. And then the ASX starts recovering into the close today, recovers tomorrow. You probably find that NVX will trade up and through $3. I'm still quite bullish on that. I still think it's quite good. Hopefully we just hold in there and we don't get squeezed out, but I wouldn't expect after that kind of a strong move high, and they've had some good news, that the market's going to go and head straight back down through 246. The other one we've got is PRU. Look at that on the daily basis. That's, to me, we're holding that low of around 148. Held that today, gap down on the open, and anyone look into the ETFs as well, because everyone, there's a lot of people out there talking up ETFs, and that's been quite a bit of a go-to thing for a lot of the educators. Buy into ETFs. It's been a lot of go-to thing for portfolios as well. A lot of educators, or I don't know what we call them, investment advisors, anyone like that, has been just go to the ETFs because it's a lot easier for them. If you don't understand your technicals as well, you can just go to the ETF and say, oh, look, that sector's pretty good. It's a lot easier doing a macro picture than it is getting fundamentals on each particular stock. And you've got a lot more work to do. You might go through the first 10 that are rubbish and look at the fundamentals to find a good one. Now, that's going to take a lot of time. But if you think the sector is going to go up, you could just buy the ETF in it. So there's a lot of ETF buyers that have been, a lot of mums and dads putting in their super that may have just been squeezed out this morning on this kind of open. So there's a lot of that kind of thing happening. Any bigger boys are not going to stand in the front of it when you see the US down 300 points. You are not going to sit there buying the open to provide some support. You're just going to wait, let them get flushed out, buy a better bargain after the open and start to squeeze them back out. So that kind of thing with the ETFs the ETFs are sweeping the market. Every time there's a whole bunch of sellers coming through, they're just sweeping the market, which can sort of exaggerate these moves down as well. Which you've got to be careful of. I think, who's the guy from The Big Short? I can't remember his name, that picked the GFC. He's big on these ETFs being the next big problem in the US, especially because they've got massive amounts of ETFs all over the place and they're sweeping the market. So there's stocks that could be fundamentally a cracker that could be getting swept lower in selling into the actual sector or that ETF because of the ETFs. They're not giving a fair value of the individual price. They're just basking them up into a group, selling or buying depending on the sector. And a lot of people have become more popular because it's just, to me, it's more laziness than anything else, but it's just easier than going and doing your fundamental analysis on each stock. I mean, that's why I like my technicals anyway. technical advocate here. But Perseus, that is an uptrend, pullback, sort of hovering above 150, holding 148. We'll just have to wait and see if that can continue up. The weekly is still looking good. Momentum's up. I would sort of expect that to be trading through the highs at 160.70. Hopefully we can trade up back up to this high at 162 and get through it in the coming days. Like I said, that's going to be obviously depend on your gold as well. But I think, to me, the fact that we're bouncing off these lows today is suggesting that gold, a lot of people are still viewing gold as undervalued. Maybe the Aussie dollar, so Aussie gold's doing well. They potentially expect that to do better in the near term as well. What's the other one? ALK. ALK is another one we've got, which I actually thought we were going to get stopped out of this through 110. I think we're going to stop at 108. It might be at 110. I'll have to check on that. I can never quite remember. But anyway, if anyone knows, just put it up there. We haven't been stopped out just yet, but I thought we were going to be with that push down. The market's recovered quite a bit. If it continues to hold and we start to hold an inside level here, let's just go in closer. Inside level, say 112, 115, say 115 for argument's sake. We start to hold that level there, then I expect it to go back up and through 120 and start to trade back into new highs. Then, like I said, anything that's been running up so hard, we got in somewhere around 91. It's had a good run up to, we've taken some partial, just holding that second leg up, which is in profit as well. Where if we get stopped out of that, we still make some money on that. The fact that it's had such a good run up, when you, like I said, days like today on the open, people are going to bail on the open and go off to work, and then the pros are going to let them bail on the open, potentially start to pick them up again. So you might find that if they start to lift it again, anyone that's bailed might go, oh, still a great stock. I got flushed out of it. I'm going to have to buy it higher because I think this is going to $2. So when they buy it, they're looking to $2. But when you get a red day in the US on the open, they might be going, that's it. It's all over now. So it's just a mental game of these sort of pullbacks. On the weekly, that momentum's still up. You can just see that it's spiked. We may need a bit of a reversion to the mean. The daily's not showing it just yet, but if it turns into a lower high $1.20, expect it to go through $1.10. We're going to get stopped and expect a bit of a grind lower, at least just to flush out. And we might have to wait for the weekly to now reset itself. Okay, all the other ones I've not got through. MGX, Perseus done, ALK done, MVX done, MGX. We'll go over that last one. Mount Gibson is recovering now as the market seems to be recovering. We're down 58. I think we had a low. Let's just see what the low was on the ASX. 72.49. So we've rallied 50, 40 points off the lows. We're just down, give or take, about 100 points, and we're just rallying off that low now. So that's not bad from the old ASX. So you get people, if they don't look at it during the day and they sold on the open, they've come and looked at the close, they might find, 40 points, I should have just held it. It could be the same as what we saw previously on the ASX. You had that day that we were just talking about, the big sell-off and then bounce straight back again. So yeah, Mount Gibson, the reason why I like this, I don't particularly like this move up here. I think it could give up, with this spike here on the 12th, spike through the previous highs and then rejection. It could, I think, if it goes through that sort of 90 zone, okay, it's all over for us, and we might be looking this as a lower high. But the weekly, to me, is really building. You got that big spike up, big push down, another rally up, and another bout of selling coming, but it didn't get through the low before we started holding up off 60 cents. Higher low, higher low. This is another inside higher low of that weekly trend up, pullback, potentially looking to go through one. I think if it can get through one, there's a good run up to 120 on the cards. And that's why I'm sort of liking it. It's just the daily. I would like to see that kick off sooner rather than later. One, because I'm impatient, and two, that I think if it doesn't, a lot of people might be forced into selling or start to decide to sell. And then we get squeezed out, it gets chopped out, comes down, maybe down to 85, 86, 87. We get squeezed out and turns around and bounces again. So that's what we'll just keep an eye on here. Let's just get on to anything else. Probably Euro, Aussie. Let me just see. I should have that somewhere. See if my pins are any good. Euro, Aussie, that was it, wasn't it? Yep. Mouse has disappeared. I'll get onto the daily first just to see. trying to build a bit of a picture here. All right, so that, being belted, we had a big run up here. What was that? That was, that was in the pandemic. Big run up, big beating back down again. Pretty much went sideways, and we've had another sell-off. So we've sort of had a secondary leg down. Yeah, that's not as hard as that initial leg down off the highs, but it's just into a good little support zone through here. You can see it's traded there once before again. It's even, you look at sort of this action in here. So it's traded into a support zone, and we're reacting up and off. On the daily basis, we're sort of heading higher on the daily basis, okay? We're coming into a zone where we could find some resistance. Whoops, it should have held. Where it's traded through before, we traded there, reacted up and off that, traded into it, held until we gone through here and plowed straight through. So once it broke, it went straight through, held a lower high, and then went through before we started reacting up and off this sort of 153 area, okay? We're heading into that now, so I would expect personally some sort of resistance there. Now, if you're long, okay, you just got to, you either hold a bit of a wider stop, because just because we're coming up to that level doesn't mean we can't, you're looking at two things. You're either looking at to go through, retest, and go straight up and through, or you're going to look for a really shallow push through, if that makes sense, a little pop through, and then a pull straight back into the zone, meaning sort of this action. If you do that kind of action, that to me is a bit of selling, and that there's going to be some profit taking. And then if it does that kind of thing on a daily basis, you might want to tighten your stop up. All right. On a shorter term basis, maybe a 30-minute, an hourly, however you trade. But that's how I attack things. You've got the daily move up. It hasn't been, we haven't been proven wrong just yet. Potentially here, just depending on where you hold your stops. And we've got a good little support zone through here. And interestingly, if we take that, what's going on? Why went that? What's going on here? Got a bit of a dead spot. That leg up there, and we've built a little base through it. Actually, that takes us. So there's a good chance that's your first, we call it volatility leg up. The market's consolidated. You're sort of taking that support and just copying and pasting that up to see where it could go to, and basically to see if there's any confluence. Now, there is a bit of confluence up here at this resistance zone, so there could be a chance that we sort of roll back off of this level and go for a deeper corrective move lower, maybe something like this, and back into that range. We might be locked in there. We could do anything from there. So there is a chance that we get this kind of move back into the range, lower high, and then if you're long, you'd want tighter stop. Now, if we go back just to a 30-minute time frame, just to take a step back, just because I've drawn that line, that arrow up there, doesn't mean this is not possible. It may mean that it just extends it, and then we have a bit of a pullback, and then we go again. Okay, so on a daily basis, there are two sort of scenarios I'm looking at. Go down to, say, a 30-minute chart. I like the 30s. You kind of extend it on a 30-minute chart as well. So it's not something I'm going to be, let's point out the best thing, because we missed out a lot of data. I'm just assuming that it's rallied up. We're kind of at our highs at the moment. But either way, on that 30-minute chart, you've got to anchor the trend just here, and we're extended. Momentum. Look at MACD for momentum. We're not hovering around the zero like we were in here off this level, where you'd be looking to buy as we get a shift up in momentum. You're kind of looking at momentum running out of steam. So what you're saying is, if you're bullish up here, where momentum it's already clearly on the rise, but it's kind of getting to that level where you're running out of buyers, and you've extended quite hard up, I wouldn't be particularly looking for a buy entry just up here. I want some sort of corrective action, essentially like this. So what does that say? That we could extend higher? Yeah, you could be right. We could plow into there, but it's not the kind of risk reward I want to be throwing at the market on this trade anyway. So for me, I would either look for this kind of two-legged move down. You want, say, something like this, back to the MAs, and then power up again and get an entry when you're back on the rise. You just want to see some people flushed out of the action. This is a 30-minute chart. You might be trading off a 5, where you get a minor higher low in this leg up. But yeah, I would want to see people flushed out with a bit of a pullback if we're going to extend up into this high, and I want to take part in that. if it keeps chucking its way up from here, I've got nowhere to place my risk. For me, on this kind of 30-minute chart, my risk is way down here. It's not something I'm going to take. I'll just leave it and move on. Okay, so yeah, 30 minutes extended. The daily is heading higher. It's just really, both of those trends are up. It's just where, if you want to stick with the daily trend, where do you get set if you're not already set on your 30-minute chart? If you are set, where are you going to place your risk? Are you going to let it looser for now and continue on up into this level? Because I feel that we're going to expand into that level. I'm just not going to take a long off this 30-minute chart. So if you've got it on the daily or whatever, I don't know how you trade, Bobby. Yeah, you just got to know where your risk is if you're wrong and what sort of chart you're trading off. Okay, if you're trading off the 30-minute, potentially you've got your risk way down here. You might have it a bit tighter, but don't muck around with it too much because there is that opportunity that daily just keeps powering higher. Next one, MBH. Yeah, it's looking good. Not a big Maggie beer. This is a good one, Sedge. I like this. It's a bit of a seller in there at 41. It's just stacked up on the offer, but it's quite thin after that. He might just be, trying to take the opportunity to get set on the long side. So when you look at depth, just be careful because there's a lot of argy-bargy, a lot of mucking around and shenanigans that go on with depth. You can stack up on the offer because they're trying to cap it from going up. Doesn't mean they want to sell it. Just might mean they're trying to get set on the long side. Okay, so it's kind of hard. And even on this, with that big bid at 40, you can see 40 cents, the big bid there, and then you've got the next bid at 40 and a half. Doesn't necessarily mean that they want to get set. They might be trying to just ramp it up. They might be a seller trying to get a higher price. Okay, so there's a lot of mucking around. You've just got to try to pick your price action, I feel, and pick your entries and let them muck around as they see fit. If you're going to be wrong, you're going to be wrong. If it's not someone getting set, it's literally someone trying to get out, and just they might start smacking the market down. You're going to be wrong. You're just going to know where your risk is. And if you're trading off the daily, don't worry too much about your day-to-day argy-bargy on the market depth. So for me, this is actually really good. Let me I'll get a snapshot of that. And this is actually it's a really good setup. I won't lie to you, it's just probably a bit too thin for what we would love to see. It's got a lot working in its favor. One, you've got this kind of expansion, volume coming in there. You've got, I love that sort of action too. You've got the MACD, which is pressured high. It's gone down, and then we're starting to go up again. So potentially, what that's saying is you're at the start of a momentum expansion. So you're looking at a phase where we're going to expansion rather than contraction. When you get things like this, when you are extended, momentum is well and truly up, and you're potentially running out of momentum, and you're getting price. If we just take that back, price that's hovering up at highs, you wouldn't want to buy that because you're asking a lot of the market to continue up. Okay, and obviously, in hindsight, it did go down, but you're expanded. Momentum's already expanded, so you're sort of late to the party. So if you're doing it somewhere even here or here, that correlates to a really good price action setup too. Okay, so if we just go and draw those up, draw it in blue, you've got this kind of action, and you're coming off contraction here, contraction here, major contraction. So there's a lot that's working in its favor. That, to me, if you're looking at a weekly chart, you'll see that a bit clearer. You've got, I probably should clear it up, but I'll just change color. So on the daily, this is what we're looking at on blue. If we're looking at it in yellow, that's your weekly trend up, that's your contraction, and we're looking to come out and go back up again, okay, on a weekly basis. So that's what we're expecting on a weekly because we are breaking out of the pullback, okay? No problems, Nathan. Good luck, mate. Enjoy. I'll speak to you soon. But that's what we're looking at. So we're trying to, what I'm always trying to do is on the daily basis, the weekly basis, that's the way I'm trading my shares. On a daily basis, I'd love it if I'm either going up and we're early on in the expansionary phase on the weekly, I'm just trying to go with the flow on the daily, or we've contracted on the weekly. I'm not trying to buy into contraction. I'm trying to let the market show me when it's starting to expand higher, which is potentially this year. It looks great. Expansionary phase, contractive phase on the weekly, and then on the daily, that's kind of a downtrend, uptrend, downtrend. And on the daily, we're sort of looking to go back into an uptrend. It's kind of your first pullback, and we're going back up, and it's just potentially the start of an expansionary phase higher. Okay, so I see that as pretty good at the moment and a good little buy. I mean, you can easily buy that through, what's that, 42.5. You risk below sort of 37 because you're looking at this kind of action higher on the daily. Okay, and that's what you're taking in consideration. You're looking for another leg up like this. Okay, so yeah, it looks really, really nice. I would be punting that this is going higher rather than lower anytime soon. And you got a bit of volume that's come in the last few days, which is quite good, just in here on this little pop. No real volume through this move here, which correlates to the pullback. So even though it's pulling back, there's no one really willing to get out too much. Okay, so it's just weak hands getting flushed out. After this pop, weak hands get flushed out off that might have bought it at 42.5, going, oh, we're going over, we're going over. And all of a sudden, we start to ramp up again, and they might be chasing the tail, and they chase it back up again for you. Or you get people adding to the position as they start to buy back into this market. They might have bought some of that little pop, watch the pullback, adding to a position on the rally. They've got more confirmation that the weekly's starting to kick off, and in they go. Okay, that's probably it. I think that covers everything that we've got. Is there anything you want else to look at just before we call it quits for the day? The market's not looking too bad. I just want to see where that Hang Seng's going. Hang Seng closes in 30 minutes. I'll just get onto my general markets. That's probably about it, hey? Hang Seng, it's doing nothing. It sort of had a sell-off, and then it's decided to just hover around. So for this here, I wouldn't be, it has bounced back actually since we've been talking. So I was selling sort of this move down, a bit of this move down, didn't get it into the flush there, and then we popped back up again. So to me, that's what you want to see. So if anyone's wondering about what sort of price action you're looking at, I wouldn't be shorting in here because we've broken an anchor to the uptrend, sorry, the downtrend. And for me, that's kind of your anchor. Even though we flushed it, I'll be more inclined to be looking, because we've got momentum shift up, I'll be more inclined to looking for a deeper pullback. Okay, meaning I'm looking for a higher low somewhere in here off this 5-minute chart, which I'm not going to do now because we've only got 25 minutes of this session to go. And then something's going to happen to probably gap up or down on the reopen at 3 o'clock. All right, but yeah, that's the way I'm sort of looking at the markets, and that's why pretty much I'm trading, especially with the Hang Seng. You can see that 5-minute, once we got into the support zone and it started to hold. If you look into a, not so great, but you look into that 1-minute chart, you flush around here and you start to head south. I was short there for a little bit. I think I got stopped out in this little pop-up. I was looking for a short in here, got stopped out, and then I reshorted it later on. I think it was just in here, that little run down, but didn't get the bulk of it closed out just before we started talking. So, but yeah, that's your 1-minute chart. And if you 1-minute chart, you're holding lower highs, you've got these little pullbacks, but they're very shallow pullbacks. And the 5-minute is just red candle, red candle, red candle. So you're sort of looking at the strength of the 5. The 5-minute is showing momentum's definitely down. And you're just looking for those little 1-minute pops to sell into until that 5-minute starts to change, which I think it's just done with this pop, breaking that anchor potentially. So it broke it, triggered some stops potentially, and there's a couple of red candles here, but I feel that the momentum's up. If it starts to grind down and we start to get, just look back at the one, we're starting to really trying to time maybe a run back up and a deeper. So if that's the push up, this is your pullback on the 5, and we're looking for another run up. You can kind of go, well, this is my projection. If, say that's the low, for example, I go, if I get long and we start to squeeze, that there's going to be a lot of short sellers that potentially are not out on this pop, are still thinking, this is the sell-off, this is the sell-off, and all of a sudden they get squeezed out of the market. We get a deeper correction higher, and you can actually trade that on the upside. All right, so that's basically the way I'm structuring my trades anyway. So I've got action where I want to see, I've got an expectation, and I'm planning to trade even on the intraday basis around that is those expectations. If I'm wrong, I'm wrong. I mean, for me, I don't really want to get short here because of this pop through. Okay, because I know that people will be getting short. They see this, they go, oh, I'm getting short, and they're just fodder for a pop, a decent correction. So not only these shorts, anyone that's held it for quite a while off the opening move down, they're short. They're going to hold the short into the close. We could get a bit of a squeeze up. There's enough fuel on the downside to squeeze straight back up again. All right. Well, I'll stop ranting. Thanks very much for joining us, guys. Much appreciated if you could leave a like on the YouTube channel if you enjoyed what you heard. If you enjoy my rants, leave it on. and help us spread the word a bit, especially with technical analysis. I think it's a bit of an art form, and I think it's really good for I feel everyone to have some sort of foot in the technical analysis camp. Even if you're pure fundamentalist, I think you can't. I don't know how, because I don't do it potentially. How you time your markets without just buying something when it's undervalued is, I don't think, it's good enough for me. And getting out when it's overvalued, because I know that people they won't ever get out. There's no overvalued market; it's always undervalued with the shares. But anyway, so that's why I really like a technical side. I think it's really worthwhile just helping spread the word if you can. Leave us a like, leave us a comment if you want, and I'll get back to you. Anything you want to hear that you didn't hear today, just send us an email to support@tradesetup.com.au, and I'll get back into it. All right, thanks very much for joining me, guys, and we will speak to you again next week. Cheers, enjoy your day.